Hello traders, you are watching the weekly Forex Outlook by Light Forex. From this video, you will discover the prospects for the main currency pairs. As you can see on the chart of the US dollar index, American currency strengthened last week versus its counterparts. It happened even despite the fact that the market expects the Federal Reserve to cut interest rates this year. The reason for the greenback strength was that other currencies, in particular the euro, the British pound, the Australian dollar, felt even worse as these countries have serious economic problems and their central banks are even more dovish than the Federal Reserve. As a result, the USD took off from the support and managed to break above some important levels. Still, the currency is trading below the highs of May, and this level will represent a major resistance. Last week, America released strong retail sales figures on Friday, and given the fact that the week before labor market figures were weak, we can see that the fundamental picture for the American economy looks mixed. We can now have a look at the economic calendar at lightforex.com to see which events are scheduled for the upcoming days. On Monday, there are no really important events except for the speech of the ECB President Mario Draghi. He will speak at the European Central Bank's Forum on Monday, on Tuesday, and on Wednesday. During some of these speeches, he may say something important for the euro, so keep a mild watch on these commands. On Tuesday, the Reserve Bank of Australia will release its meeting minutes, and given the fact that the central bank cut its interest rate in June and the fact that Australian fundamentals are bad, we can expect this event to have a negative impact on the Australian currency. In addition, on Tuesday, America will release building permits, Canada will release manufacturing sales, and the Bank of England's Governor Mark Carney will deliver a speech. On Wednesday, there will be CPI figures from the United Kingdom. CPI is the indicator of inflation. All in all, it is in line with the Bank of England's target, more or less. Also, there will be inflation figures from Canada, and the release will have an impact on Canadian dollar. And the highlight of the day and the most important event of the week is FOMC statement, FOMC economic projections, and its press conference. The Federal Reserve will make its interest rate decisions, and this time traders expect no changes in policy. Still, market players are 85% sure that the Fed will cut interest rates next month in July, and everything will depend on what the Fed says and does. If the Fed delivers a surprise rate cut, the USD will fall. If the Federal Reserve releases projections which are in line with current expectations of 2 rate cuts in 2019, then the market won't be surprised and probably the USD won't suffer much. If the Fed is less dovish than the market, then the USD will be able to continue strengthening versus other currencies. The meeting will be very important, and all the things about the decision and press conference will be highly watched by traders. On Thursday, during the Asian session, New Zealand will release GDP growth figures for the first quarter. The data may be affected by the uncertainty related to the trade war between the United States and China, because New Zealand is vulnerable to this kind of things. There will be a speech of the Reserve Bank of Australia governor, and he may adjust his speech to the Fed's decision the day before that. There will be a statement and a press conference of the Bank of Japan. So far, the central bank didn't change its policy much. It still didn't reach its inflation target, and we'll have to see whether there is something new at this meeting or just as it was before. Britain will release retail sales figures, and you can see that the forecast is negative. And there will be a meeting of the Bank of England, another central bank, which makes its decision this week. No changes are expected, and on the one hand, British inflation presumes further rate hikes in Britain. However, Brexit uncertainty is hurting the economy and is a factor which may be a very bad thing for the country. As a result, the Bank of England may try to balance things in its statement, and traders will watch to see how the central bank estimates the current situation. Finally, on Friday, there will be the release of European manufacturing PMIs, the fresh data about European economy, and figures will be watched by traders, especially German one, because so far it has been below the key level of 50 points, which means the contraction of industry and is bad for the euro. And finally, Canada will release retail sales on Friday, so watch it if you trade the Canadian dollar. Let's switch to the charts to see how the things are for the major pairs. Euro dollar met resistance of the 200-week moving average in the area of 1.1340. That level provided resistance the week before, and we can see that the euro failed to get above this line and returned lower. On the daily chart, we can see that there was a top which formed ahead of 200-day moving average in the area of 1.1355. All in all, this area seems like a hard resistance, which will remain so in the upcoming weeks, so that euro will trade closer to 1.12 mark. In addition, on the daily chart, we can see that the euro also went below 100-day moving average at 1.1265 and 50-day moving average currently located at 1.1217. The attempt of the euro to recover will meet resistance around 1.1260 and next resistance we have already mentioned. On the downside, we are targeting levels like 1.1185 and 1.1115. The market will be moved by commands of the ECB President Mario Draghi, the Federal Reserve's meeting the key things. So trading will be done in the sideways market around the mentioned levels. The British pound also went down at the end of last week due to better than expected data from the United States and political uncertainty in Britain itself. There, Boris Johnson, one of the candidates for a position of British Prime Minister, has got the largest number of votes in the first round of voting. Boris Johnson is in favor of no-deal Brexit, so that's why the British pound is under pressure. The election, the voting will continue in the upcoming weeks, so it is not decided yet. The currency pair will be moved by the meeting of the Bank of England and the Federal Reserve. So far, we can see that there is this general head and shoulders pattern, which allows for bigger decline in the British pound. Support is located at 1.2560, and the decline below this level will open the way down to 1.25 and 1.2450. On the 4-hour chart, we can see that there was a break below the range, the lower border of which it was at 1.2660. And now this level will represent significant resistance if the pound manages to get above 1.2610 mark. New sell orders will appear at 1.2660 level. Dollar yen traded almost sideways, even despite good data from the United States. We can still see that there is the resistance line limiting the upside, as the pair will try to approach 109.25 marks. And well, on the downside, the level to watch is 107.70. If the Federal Reserve is indeed dovish and expects many rate cuts in the foreseeable future, the USD will decline to this level. The next level to watch on the downside will be the area of 106.40. The US dollar Canadian dollar formed a piercing line pattern on the weekly chart as it took off from the 50-week moving average and returned above the support line, which was broken a week before. The levels to watch on the upside are 1.3460 and 1.3565. If the Federal Reserve is less dovish than expected, then we will head in that direction. Support will be located around the trend line in the area of 1.3330, and the decline below this level is needed to make the picture once again negative for the USD. Commodity currencies like Australian dollar and New Zealand dollar are suffering. Versus the American currency, we see the continuation of the downtrend, and currently the Australian dollar arrived to the levels of 0.6865, the lows of May. Here some support is possible, but still the Australian currency remains vulnerable for further declines to the levels around 0.6830 and 0.68. Attempts to recover will meet resistance at 0.6950 and 0.70. The picture for the New Zealand dollar is quite similar, so we can identify the level of support at 0.6480, the next target on the downside at 0.6425, and resistance in the area of 0.6585. Gold made a spike to the upside. We can see that dodgy shooting star candlestick on the daily chart failed to close there, and now we see a correction. The target area is at 1325, 1320, and there should be some support. If we see a break to the downside, there will be a double top pattern, and the metal will slide to 1300 level. That will happen if the Federal Reserve is not really dovish. If it is dovish, then once again the market will make an attempt to break above 1350. It won't be very easy, but still possible for gold to try to go there. But the short-term scenario looks like we'll see correction to the downside. Finally, Brent oil is consolidating, and here the market will get no relief until the meeting of oil exporters at the end of June. For now, the market is under negative pressure, given the fact that trade tensions are still unresolved, and there are big questions about global demand for oil. So the key level on the upside is still located at 64, while on the downside the decline may bring the prices to 58.60 mark. Thank you for your attention. Trade with Forex, and follow the updates at our YouTube channel.